All right, everyone, here we are with ticker symbol HYLN, Hyliion Holdings Corp, previously known as Tortoise Acquisition, and was trading under the ticker symbol SHLL. To all my first-time viewers and investors, welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. But as we jump into this chart, I do want to say to all of you, and one of the simplest ways to say thank you and also let me know that this insight was valuable, you can click that like button. It's a click of a button and it tells me that thank you, that you watched the video and that you found this helpful and informative. So let's jump into this chart. So here we are with Hyliion going deeper into bearish territory, but the bulls have slightly recovered. So every day it hits a new low, but the bulls try to hold themselves up. And the most interesting thing is that they just hit the 50-day moving average and they fell and got rejected. So they're having trouble even going back up into bullish territory. I mean, they're struggling. They've been having this issue, but this momentum is pretty sharp. This is really sharp momentum here that the bulls can actually start a staircase effect and get to the next levels and continue to work their way up in this direction, probably getting them back into bullish territory. We're going to have to look closely because the bulls need to break through the 50-day moving average, and they're going to have to break through the resistance level. And excuse me for Neo, that was the previous video that I did. If you guys are checking out Neo as well, check it out. But Hyliion has to break through the 50-day moving average to get back into bullish territory. The investors are going to have to load up on shares. The bulls need to come in and take over to continue this momentum. We're still in bearish territory. So let's look at the new low and let's go ahead and move our resistance to its new location and see what is important for tomorrow. So most importantly, out of all of this, the resistance level that was from yesterday to today is important because that's still an important resistance level. If this gets broken through 2068, this is pulling away from the 50-day moving average. It's a confirmation in bullish territory, and if the bulls can pull away from that in an upward direction, they can actually get deeper into bullish territory. So keep that number in mind. Let's go ahead and move our resistance to its new location so that we can land exactly on it. And here we are with our new resistance. So the 50-day moving average is slightly below resistance by 1 cent. It's 20.48. And our resistance level is 20.49. I mean, give or take 1 cent or 1 cent more, 1 cent less. That is literally the most important point right now for the bulls to break through, to then get to the next one and then pull away from it in an upward direction, getting into bullish territory. Again, this is a very sharp upward direction. So the bulls have a shot here to get back up here. The question is, will they be able to maintain the momentum and continue to work their way up? Now, the bears are going to want to try to break through this point, and this is the support. This is the lowest point reached in this bearish run, and that's 1923. If 1923 gets broken through, this could be on its way to newer lows. It'll pull away from the 50-day moving average in a downward direction, and also we are currently in 2019 for the price right now. 2019 is the current price after hours, and it's important. Why? Because we're not that far away from support. We're $1 away. I mean, that's literally how much it dropped almost all day to get to that point, and then now the bulls have reappeared. So if the bulls can't hold this up, just like it dropped yesterday, it can drop again, and it can actually probably, if it breaks through a whole dollar, it can break through support and a few cents below that and probably pull away further. So this is why support is super important, and the current price, because we're not that far away from support. We're in bearish territory, and if support is broken through, this could be well on its way to newer lows. Now again, back to the resistance. The bulls need to break through the 50-day moving average to get back into bullish territory and break through resistance to get through the first point in bullish territory, which is literally 1 cent above the 50-day moving average, and they need to pull away from it so that they can go ahead and get deeper into bullish territory, further away from the 50-day moving average in an upward direction. So important for the bulls to continue this momentum and get back into bullish territory and gain some control over this chart, they need to break through 2049. If they don't accomplish that, even if this is moving sideways, they're still in bearish territory, and the bears are going to try to gain leverage to break through this support. And I want to emphasize, pay close attention to the support level and how the stock is reacting if it breaks through it or as it gets closer to it. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the like button to let me know you watched this video, and it's the simplest way to say thank you for the information of a click of a button. And also, first-time viewers and investors that are inclined to subscribe, click on the bell so you can turn on all notifications and not miss a single video that I post. Share this with your friends and community, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date, it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy Like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.